Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at energy fuels.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our discussions. And if there's any stock you want us to look into, leave it in the comments section below.
So let's get into the analysis. Energy fuels. This is a fascinating story.
It really is, because it isn't just one thing. The company sits at this perfect intersection.
Exactly. The nexus of two massive, politically strategic and high growth cycles.
Okay, so on one side, you've got the whole revival of nuclear power.
Right, which is all about uranium demand. And then on the other side, you have this urgent push for domestic critical minerals.
Specifically rare earth elements.
That's it. And that dual focus is just, it's so critical. It makes them more than just another mining company.
Yeah, they're positioning themselves as a strategic national asset for the U.S.
Precisely. So when we look for the core thesis here, we have to start with their competitive moat. They're a leading domestic uranium producer, sure, but the real power, it's their infrastructure.
Centered around the White Mesa mill.
All centered around that mill.
That mill always comes up. What makes it so unique? I mean, beyond just processing uranium.
It's not just a mill, you could almost call it a regulatory fortress. The biggest piece of the puzzle is its role in the high-assay, low-enriched uranium ecosystem.
Yeah.
HALEU.
Right.
Energy Fuels runs the only licensed and operational facility in the entire U.S. that can produce HALEU at a commercial scale.
Okay, that's a staggering claim. Let's unpack HALEU for a second, because that acronym gets thrown around constantly. What's the fundamental difference, and why does being the only domestic producer matter so much?
Well, HALEU is a total game changer for advanced nuclear tech. Standard fuel, your typical low-enriched uranium, it has a U-235 concentration below 5% usually. Yeah. HALEU bumps that way up, sometimes between 5% and 20%. And the reason that's so crucial...
It's about how long it lasts, right? The burn rate.
Exactly. The next generation of reactors, these small modular reactors or SMRs, can run for years, sometimes decades, without refueling. It just completely transforms the economics and the safety profile.
So it's a high-value specialty product for the future of U.S. nuclear. And Energy Fuels basically holds the keys to the entire domestic supply chain. That's a huge hurdle they've already cleared.
It gives them enormous leverage. And the White Mesa Mill is the only U.S. facility that's licensed to process uranium from both conventional mining and from tailings.
Wow.
Plus, their own purification process gets them to over 99.6% purity. And you need that level to meet the Department of Energy specs, so they can completely bypass any foreign refinement.
And if they're the only ones who can make it to spec, the customer side must be pretty locked in.
The demand visibility is exceptionally strong. 4 of the 6 big U.S. advanced reactor developers have already signed exclusive long-term offtake agreements.
For what years?
These contracts cover HALEU delivery from 2026 all the way through 2030.
Which means the switching costs for those customers they're prohibitive. Once you design your reactor on that supply, you're locked in.
It creates a really solid floor for their future revenue. They're not just selling a commodity, they're selling regulatory security, supply certainty.
Okay, let's pivot from nuclear. The second pillar here is this diversification into rare earths. How does a uranium company just move into the market for EVs and batteries?
The synergy is actually built right into their process.
Yeah.
They handle monazite, which is the mineral sand that's rich in both uranium and rare earths.
Ah. Oh.
So they've been pushing hard on pilot production for key heavy rare earths. We're talking dysprosium and terbium, and also light ones like NdPr oxide.
And dysprosium and terbium are the real prizes there. You need them for the high-performance magnets and EVs and wind turbines, and getting them domestically is incredibly hard.
It's a brilliant strategic move.
Yeah.
It puts them right in the EV and battery supply chains. If they can scale up that part of the business, they go from being a niche nuclear supplier to a major player in the global critical minerals race.
Strategically, the story is just so compelling. You've got domestic dominance in one area, a monopoly in HALEU, and then this clear path into rare earths. But the strategy only works if the financials hold up.
Right. And this is where we have to untangle the short-term noise from the long-term trend.
So let's look at the numbers.
Okay, so the recent signals have been a bit mixed, which, reflects a company in transition. Q1 of 2025 was very positive. Revenue was up to $28.7 million, a 37% jump year over year.
And what drove that spike?
Mostly surging uranium and HALEU sales. In fact, HALEU revenue alone nearly tripled in that one quarter.
And they actually turned a profit, which is a big psychological milestone for a company at this stage.
Absolutely. Q1 2025 saw a positive net income of $1.9 million. That was their first profitable quarter in 3 years.
And after that, management raised their guidance for the full year.
They did. They bumped up revenue guidance to between $125 and $140 million and EBITDA to between $38 and $45 million.
Okay, that all sounds incredibly bullish. But hang on, here's where it gets complicated.
Yeah.
The trailing 12 months revenue is about $78 million, right?
Right, ending September 30th.
But the analyst consensus for the full fiscal year 2025, it expects a pretty sharp decline, almost 40% year over year. How do you reconcile a strong Q1 and raised guidance with an expected 40% drop for the year?
That is the central question, isn't it? And it shows you they're in this transition phase, that expected decline. It's not a sign of fundamental weakness. It's more a reflection of the timing of specific, very large deliveries and contract cycles.
So the market sees 2025 as a sort of trough year.
Exactly. A trough year that's just setting up the next big wave. Analysts aren't bearish on the future at all.
What are they projecting for 2026?
A massive rebound. Revenue growth projected at a stunning 85%. So that 2025 dip is really just noise around contract scheduling.
It must help that they have this incredible financial strength to get through any timing issues. They're sitting on a huge war chest.
Undeniable strength. As of November, their working capital was getting close to $1 billion.
Wow.
And that was significantly bolstered by a $700 million convertible note funding they did.
Okay, let me challenge that for a second. Raising $700 million through convertible notes gives you flexibility, for sure. But isn't that a pretty significant dilution risk for shareholders down the line if those notes convert?
That's a critical risk factor, absolutely. Management is making a bet.
A bet that future growth will just completely outweigh the dilution.
Yes. They need that capital now to build out the rare earth facilities and finance the inventory for HALEU. And since they have almost no long-term debt, the market seems willing to accept that future dilution risk for the immediate growth opportunity. It's aggressive.
It is. Okay, let's shift to more recent corporate activity. What have we seen over the last few months?
We've seen some repositioning. Director Robert Kirkwood resigned in mid-October, which can sometimes signal a shift in board strategy.
And some insider activity.
Yeah. Form 4 filings show some sales, which, it could be concerning or it could just be planned liquidity events for management. Hard to say.
What about the big institutional money?
That's been picking up, modestly, but it's there. We saw a significant institutional stake change disclosed in October, which suggests major funds are adding to their positions.
They're buying into the broader narrative.
They are. The U.S. energy security story is just getting too loud for big funds to ignore anymore.
So what about the technicals? Where's the stock price sitting right now?
The technical picture is, well, structurally bullish, but it's been corrective in the near term. The stock is trading above its 200-day moving average, which is around $11.09.
So the long-term trend is still intact?
Very much intact. However, it's currently below the 50-day moving average, which is way up at $17.72.
So we're in a post-correction accumulation phase. The short-term pain has been real, but the long-term trend seems to be holding. What are the key levels people should be watching?
Support seems really strong in that $12 to $13 range. If that holds, you could see a run back up toward resistance between $16 and $18.
And we have to mention the beta.
Oh yeah, the beta is high, 2.05. So that tells you that any news, good or bad, is going to cause some outsized moves. It amplifies the risk, but also the potential reward.
It reflects the whole strategic nature of the sector.
Okay, let's look ahead. What are the big definitive catalysts coming up in the next 3 months?
The immediate focus is all about execution. That means earnings. We're looking at the Q4 and full year 2025 release, probably around January, February 2026.
And the market's going to be scrutinizing what specifically?
Two things. First, the uranium prices they actually realized. And second, and maybe more importantly, the progress and sales volumes from the rare earth side of the business. That ramp up is the real swing factor.
And besides earnings, are there any market structure events to watch?
Yes, the index and ETF rebalancing in mid-December. Since energy fuels is a big piece of certain ETFs, that rebalancing can drive a lot of short-term volume.
And then the new year. Then we get the 13F filings in January and February. That's when we'll see which big funds we're buying during this recent correction. A few big names showing up could be a massive vote of confidence.
Okay, those are the confirmed dates. Now for the fun part. Let's talk speculative catalysts. The rumors. What's the chatter?
The chatter is persistent around the rare earth business. There's a lot of speculation that they could announce a strategic partnership or a big offtake deal with, say, a car manufacturer or a defense company.
Which would totally de-risk that whole ramp-up.
Completely. And then there's always the government angle.
Yep.
Continued talk that they're a prime candidate for a new government contract or grant to support the domestic HAU supply chain.
A government announcement would be a huge signal. And finally, M&A. The whole critical mineral space is heating up.
Unconfirmed reports, but yes. There's talk of potential takeover interest. With their unique assets, the license mill, the HALEU monopoly, they're a very attractive target for a larger resource company.
Okay, so a packed calendar of knowns and unknowns. But we have to close with the risks. For all this bullish potential, what are the real downside factors?
Well, the number one risk is still execution. If they have delays in that rare earth ramp-up or if they miss a HALEU delivery, that will crush investor confidence, especially during this transition year.
And they're still exposed to commodity prices even with their low costs.
They are. Performance is very sensitive to swings in uranium and rare earth prices. That low-cost structure helps, but it doesn't eliminate the risk.
But the biggest risk for me is often concentration.
That is the crucial point. A huge chunk of their future high-margin revenue depends on DOE contracts and HALE demand from a really small customer base, just a handful of reactor developers.
So if one of those big SMR projects faces, say, a political delay,
the whole HLU thesis could be undermined, at least temporarily. You have to watch the political landscape just as closely as the numbers.
So taking all of that in, the powerful moat, the huge cash reserve, the diversification, the catalysts, what's the overall outlook?
I think the outlook remains highly bullish, but you have to accept that near-term volatility. This is one of the very few companies that has a robust balance sheet and an almost insurmountable regulatory advantage in a vital sector.
And all those near-term catalysts could really drive appreciation if sector tailwinds keep up.
They could. If the global trend toward energy security continues, Energy Fuels is just uniquely positioned to capitalize on that government support. But the key thing to watch, it's not just the price of uranium. It's those Q4 execution results. That's where we'll see if management can deliver on the rare earth ramp-up and justify that aggressive strategy.
Make sure you subscribe and tune in tomorrow for our next stock analysis.